Hello everyone, good afternoon and welcome to our monthly webinar on currency outlook. Of late, we are seeing a lot of volatility happening on the USD INR. Though we don't have much of central bank policy in the coming month, but we have always seen that historically September is the month where there is a lot of volatility across all the segment, and that is what we'll be seeing in the coming webinar. We have with us Mr. Dilip Parmar. He's our research analyst at HDFC Securities for currency segment. So not wasting much time, over to you, Dilip bhai. We'll see what happens in the current month.
Thank you, Samir bhai. So as we have last time also expected, August could be the month where we can see the upward breakout. Though by the late month we have seen that the pair has again retraced back to the range. So it's almost 11 months since the USDINR has been stuck in the range. Usually what we are studying and learning from the past experience, that whenever the such kind of accumulations or consolidations happen, historically it has been probably the negative for the rupee side, but this time the scenario is quite different. uh, if we go by the what are the factors which affected the USD and to remain in a range, we will discuss one by one. The uh, first of all, let's go through the market movement in the month of August. As you can see from the table, yeah. So as you can see from the table that the dollar index remain again come back, and haven buying has been seen, just because what we see that the August is usually a negative month for the risk assets, and the benefit of the same has been seen in the dollar index. What other things which we have seen, that the African currency depreciated 5.7% just because of the uh, some local issues, and commodity driven currencies has been hammered down just because of the global uncertainty, particularly from the China side. Economic growth remain a worrisome, and that was the reason the South African currency depreciated sharply. What we Another things we have seen, that the Brazilian real, that is also a commodity currency. uh, the exception is on a Australian dollar, which has gained somewhere around 3.5% after after the Australian Central Bank turned the raised the interest rate, and that has supported the Australian dollar. Uh, Another currency which we look at is the Japanese yen, which depreciated 2.28% against the USD, just because the Bank of Japan remain on a dovish side, and the yield curve control mechanism which it has in place for the so many years has been revised upward, and that was the reason we have seen that the flows has been moved from the globally to the back to the Japanese economy. So that was the reason the yen has depreciated. This month we have again three major central bank, that is FOMC, Bank of England, ECB, and Bank of Japan. These all four banks again meet this month, and that will drive the extra volatility in the global forex market is concerned. So as discussed above, the currency, from the currency side, dollar remain on a demand side for the August month. Again, September is another month in which historically the dollar index remain on a right side and remain on a positive side. So that will be discussed in the later part of the presentations. So far as gold and silver consensus remain under pressure, just because the safe haven demand has moved from the commodity driven to a currency driven mechanisms, and what we have seen that the Japanese yen and the dollar index both remain on a positive side. Another things which we see on a Asian currency side, the Chinese yuan depreciated somewhere around 2% just because of the worries over the economies. The Chinese PBOC tried very hard to give some stimulus, and so many steps has been taken, but it was unable to cheer the market, and the currency depreciated around 2%. So that was the August month. Now let's go through the some of the economic viewpoints in on the basis of which the USDINR remain on a best performing currency among the Asian's currency. If we go by the last month performance, though rupee depreciated against the dollar, but among the Asian's currencies, we are the best performer. Reason being, first of all, the here you can see that the red line is the India manufacturing PMI, black line is the global PMI, and the green line is the US PMI. So you can clearly see that the our PMI is heading higher, while the global PMI and the US PMI has been going down. So that is indications. This is an indications that the growth remains on a stronger side for the Indian economy is concerned. So while the same remain concerns for the developing currencies or the global side. So that was the growth differentiations which is supporting the Indian currencies. So divergence between manufacturing activities or growth activities, one of the reasons for the rupee outperformance. Second factors, we see that the inflations. If you go by the last few months inflation's number, you can see that the green line is India's CPI number. This is the global commodity index. You can see from the chart that the commodity index has been bottomed out along with the Indian CPI. That is indicating that as the global commodity price has started moving higher, the inflations at the domestic front are also seen upward momentum. Though the pace for the India's inflations remain on a higher side just because of the some of the perishable items moved sharply higher due to demand supply mismatch, and that was the reasons the inflation's number for the July month were quite disappointing. But if we go by the past few statements from the RBI members, we can see that as the food prices has started coming down, particularly with the vegetable prices, the inflations which spiked to 7.44% is due to the tomato and some of the spices item. But as the tomato and some of the other vegetable prices has again coming down, so the impact can be nullified, or we can see that that numbers can be displayed in the upcoming numbers. So the thing is that though the inflations may come down, but the worries remain from the RBI side just because the monsoon figure for the August month was slightly on a deficit side. If you go by the monsoon number for the August was the worst month historically for so far as rainfall is concerned. Now we are at a 9% deficit of a average rainfall. So that is another concern. Hope for the best that the September remains the better month and we can catch up the on a rainfall side. So inflation is still a worry for the domestic as well as for the global side. Another things which is in a favor of rupee was the foreign fund inflows. This chart is the FII's inflows in the equities on a rolling basis. This is the fourth month in row where we see that the FII has bought in the Indian equities, and that was the one of the reasons we see that the rupee remain on a positive side. Another worry for the rupee is that the crude oil prices has back to the yearly high level, and that may create a problem. Uh, Technically, if you go by the numbers, the oil really has finding its own mozo, and it has started trading with the higher bottoms and has given a multiple top breakouts. Going ahead, there is a support somewhere around 80.50, while on a higher side 94 kind of a level can be seen. So the risk for the uh, uh, if particularly for the countries like us, which are more dependent on the import sides. Somewhere around 85% of our domestic need has been satisfied through the import. And if the crude head towards 93, then it will be difficult for rupee to hold the gains which we have, and the outperformance will be at a risk. So one should look at on the crude side. Any level above 90 could be the some of the monetary policy changes, some hawkish stance from the RBI, or some other hard step can be expected from the central banks, and that will create a problems uh, for the rupee is concerned. So far, markets are pricing in some of the um, positive steps from the government. Recently, the government has reduced the LPG prices under the Ujjwala scheme. There is market expectations that they may lower the duties on the petroleum products, and that may help to curtail some inflations. But if the crude oil price says started northbound and touch the level of 90 odd, there will be a really worry for the rupee is on a card. Uh, Uh, Another things, another points which remain on a focus for that the rupee follow the Chinese currency. In particular, if we go by the momentum, here the blue line is the rupee line against the dollar, and this is the black line, which is the CNH or Chinese currency against the US dollar. What we see that since start of the August month, we have been following the Chinese currency rigorously. Though in the last week of the August, we see that the some of the RBI interventions supported the rupee uh, uh, to divert from the Chinese currency. But now again, the month has been started with the following the Chinese footmark, and we are almost mirroring for last 1 month mirroring the Chinese currency, and probably we again mirror the or we can move on a footprint of the Chinese currency. So one should remain on a focus towards the Chinese currency as well as how it moves. The accordingly the rupee may try to catch the moment again, just like Chinese currency. Now back to the technical aspects. As you can see from the last October, we have been trading in the triangular pattern. This is the USDINR weekly chart. As you can see that last month we have given a breakout about the trend lines or a triangular pattern. But as said in the last week of the August, this is the black candle due to the RBI interventions, dollar selling from the RBI, we back into the resistance line, or we can say that the throwback has been seen. However, if you go by the trend directions, we are still holding the 20-week exponential moving average. That will remain the crucials for the further directions. As long as we are holding the level of 82.44 on the future side, there are probably the directions for the USD INR remain on a higher side. Still, one should look at on the Chinese currency, crude oil prices, and the foreign inflows for the further direction. So far as our view is concerned, our view is remains on a sideway to bullish side and will remain on a buy side as long as it holds the level of 82.30. Though we are not that much bullish, one can expect 83.30 could be the level where again RBI start intervening, and as we are having the huge forex reserves, there are chances that we may not see big depreciations in the rupee is concerned. So one should remain on a higher side. 83.30 could be the level where the RBI may come, while on a downside 82.30 will be the support line. Euro is at a make or break level. As you can see that since October, it has been trading with the higher top, higher bottom formations, and this was the first time it has broken the support of the 21 DMA. Also, we have seen the same kind of a pattern of a euro against the USD, which will be discussed in the later part of the presentations. We believe that one should turn bearish only below 8930 level. There are some divergence happening on the MACD and oscillator. We believe as long as 8930 is holding, one should remain on a neutral side, and on a higher side we believe the 90.70 could be the hurdle for the time being. The we turn bearish only below 8930 just because there is a negative divergence and negative trend indications from the MACD and RSI. We believe one should turn bearish below 8930. For the time being, one should remain on a neutral side and initiate short sell only below 8930. Uh, Again, US, just like the Euro INR is near the support line, same way the GBP INR is also on a support line. As you can see from the chart, since September, October, it has started really, but then we have seen that 5-7 months of a consolidations. Again, we headed to a new high. Throwback has been seen, or you can say the pullback uh, has been seen in last few weeks, but it managed to hold the support line. So just like the Euro INR, we expect that as long as it holds the level of 103.90, one should remain on a bullish side, just because the overall trend for the GBP INR is relatively better placed than the Euro INR, and any level above 106.50 could be the fresh buy trigger. Uh, for the shorter term, 104.95 remains the resistance. And if we sustain above that level, there are chances that we can move towards the 106.50. So the trend reversals can be seen only below 103.90. By the time, one should remain on a positive side. uh, the last pairs against the rupee JPY as you can see that rounding top kind of formations we have seen in last 11 months. uh, you can see that the 54.73 was the low in the October month, and almost we are near to that level. We have seen that the lower top lower bottom formations on the weekly chart is concerned, but now as you can see that the levels at the time of 54.73 and level at the time of 56.75 is quite different. What we are seeing that the trend is exhausting. Though the we remain on a bearish as long as it has been trading below 58.60 or levels. uh, One could reverse the back reverse only above 58.60. By the time one can eye on a 54.70, as the oscillators, moving averages, technical chart patterns, all the indications are still on a bearish side. One should return bullish only and only above 58.60 58.60 level. By the time we one should see the level of 54.70 as a strong support. uh, this is the monthly September future price actions. 0.5 is the gain in the August month. If you go by the open interest changes, volumes, everything is indicating that the long build-up has been seen in the August month. So that's the reason we believe that the one should keep a positive stance for the USDINR and turn bearish only below 82.30 kind of a level. So far as euro is concerned, we see that the price was down, open interest up, though the aggregate open interest declined, volume remain on a higher side. So this is giving that the short buildup is there. Just like the GBP, same the things we are seeing. Though the volume activity is far better than the euro INR, for the betting is concerned, for trading is concerned, one should look at GBP INR for the trading view is concerned. Uh, JPY, everything is on a bear side. Price decline 2.64%. Open interest rises. Aggregate open interest also rise. Volumes remain on a higher side. So all the indications are on a short build up side. We are not analyzing Euro USD, GBP USD, and USD JPY just because there is a missing in the volume side is concerned. So far as technical level is concerned, uh, this is the table already available in our monthly report which we published early today. Now move towards the international pair, or you can say the first of all we will try to analyze the dollar index. There is a still room to run, though we have seen that since last 8 week the dollar index has moved higher. After forming a low of 99.58 in the mid July, we are here. We formed the 8th consecutive month of a positive close in the dollar index is concerned, and we still believe there is a room to run. The reasons behind not only the technical side, but we are seeing that fundamental is also favoring the dollar bull. Uh, if you go by the numbers, the Fed is about to deliver last hike before the year end. Uh, if you go compare the US economy with Europeans and some of the other developing economies, US is doing far better. Recent inflations and job number is still warranting that there could be one more hike before the pause. So we believe that one more rate hike is on the card, and that was the reason the dollar index is moving higher, and that's why we believe there is a still room to run in the dollar index. One should remain sideways to bullish for the dollar index is concerned. Last week it has formed the hammer candlestick, which is the bullish candlestick. It has given the positive crossover to 10 and 21 weekly exponential moving average. MACD has just turned bullish even after the 8 weeks of positive close. MACD has just turned positive in the week gone. So for the month of September, 102.90 remains this on a support side. 105.90 is the resistance. As discussed earlier also, September is the month of risk aversion, and that is indicating indirectly a heaven buying can be seen, and that can be reflected in the dollar index. So that's the reason we are still believe and expect there is a rally to continue. As discussed on a upper slide, Euro INR, the same Euro USD is on the cusp of the downdraft. As you can see, this is the trend line adjoining 1.05, 1.06. The the pair almost ended the week near that. It has also formed a gravestone dozy, or you can say the bearish hanging man kind of a candlestick. Took a support somewhere around 1.07, but the interesting part is that it has closed below the short-term exponential moving average. Oscillators and indicators are also turning bearish. We believe in the near term 1.0635 previous bottom will act as a short-term support, and breaking of the same will lead to the further downside towards the 1.05 kind of a level. Uh, just like the GBPINR, the same pattern has been following on the GBP against the dollar, and traders are weighing on the growth and inflation's balance from the Bank of England is concerned. We are seeing that the inflation's number, which recently came out from the British economy, were quite encouraging. The numbers are improving from the output is concerned, so that could be the reasons the pound is relatively better placed than the euro. And as you can see from the chart, the pattern of higher bottom still on a positive side. Just like GBPINR, we believe that one should remain on a bullish side, and trend reversal can be seen only and only below 1.2530. Some of the oscillators turn weak. However, historically, there are some instances where the oscillators turn weak, but again turn on a positive side. So, in expectations and looking at the historical price actions and the oscillators, we believe that one should remain on a positive side, and the trend reversals can be seen only below 1.2530. On a resistance side, 1.2890 remains the immediate resistance, and the crossing of the same will lead to the 1.31 kind of a level. Near USD JPY, there are few things which should keep in the mind of when while trading the JPY. It is the funding currency, and looking at the past instances, the Bank of Japan remain on a dovish side. But this September meeting, there are peoples and traders who are pricing in that they may turn hawkish in the this month meeting, and that could be the reasons we can see that the JPY turn out to be the topping out kind of a things will be in place. Yen is set for the September to remember, just because there could be the change in the policy stance from the Bank of Japan. As we can see that the 5-year structure has been almost in completions, so one should remain that anytime we can see some kind of a topping positions. uh, so far as support is concerned, 138 is the support and 152 is the resistance. So that could be the level where one can see that some kind of a profit booking or the strong interventions from the Bank of Japan is concerned. So this month remain on a cautious side, and there could be some trend reversal kind of a things can happen from the uh, Japanese currency is concerned. And then last part, what are the events lineup this month are? You can see that there are so many events apart from the normal economic data is concerned. From the major economic data, we believe that one should eye on the September 24th ECB monetary policy. On a 20th, China 1 year and a 5 year LPR rate decision, FOMC meeting. On a 20th, 21st, we have a Bank of England meeting. On a 22nd, we have a Bank of Japan meeting. At the month end, Asia is mostly on a closed side. So September 28th, forex market remain closed in India. On the 29th, China is having a holiday. So, apart from the basic economic data, these are the few dates one should keep in mind for the forex market volatility and the reversal is concerned. This is the standard disclosures. So this report has been already published today itself. And for the detailed research, you can go through our monthly report from the website. Here ends my presentations. Uh, Samir bhai, over
Thank
to
you.
you. Uh,
Yeah, thank you, Dilip bhai. Great presentation. I think, uh, uh, like I said, month of September looks exciting with a lot of volatility expected across the segment, across the asset classes. Currency probably will be the forefront, which will guide the other asset class as well. One can easily trade with us on currency derivatives. One can log on to our website www.hdfcsec.com. In products page there is currency segment where you can easily just have to few clicks you just have to upload your simple 6 to 7 months bank statement and you can start with currency derivatives. One of the interesting things I want to share is that in the current month, in the month of September, we are likely to launch our currency derivative segment on mobile app, where one can trade on the mobile app. This was one of the missing piece over the years on currency segment. So with our new app Invest Right, one can easily trade on currency derivative on mobile app. Another segment, another platform which we have is HDFC Sky, where the currency derivative segment is already active. On that particular segment, one just needs to open the account. Just log into the website www.hdfcsky.com, and you'll get all the details over there. In case anybody has any question, there is a tab where a question is posted. You can post your question, and we have few minutes, so we can take few questions. So one of the question which Mr. Tanmay Patel has already asked is how to trade in currency, especially in USD dollar. So the process is simple. First, you need to activate the currency segment, like I mentioned, through our website by just submitting a simple financial document, say a 6 to 7 months latest bank statement. And once you upload that, your currency segment will be activated in 24 to 48 hours, and then you can trade in the currency pair. So the US dollar USDINR is simple. Basically, the exchange has one lot defined as 1,000 units, so you can trade in multiple of one lot, and that is in multiple of thousands. So you can place buy sell. We have our research recommendation on a daily basis. We have our weekly reports also. Sorry, you can follow those reports and you can accordingly place the trades. The margin typically are very less in currency segment, close to around 2,500 to 3,500, depending on what pair you are trading. So it's that is how typically it works. Uh, so Mr. Patel wants to know what are the risk involved in USDINR. So the risk basically are typically simple, which you do, which all trading platform have in terms of the price movement. So it is always advisable. We also from our research team always give the calls with the appropriate stop loss, so that you know the risk is defined and you know how much you are able to incur the loss and how much you are capable to take the risk in the current trade. So stop losses are one way typically to avoid big losses and define the risk you want to take. uh, and
So
in terms
one
of
more, yeah, yeah. So
yeah,
one
yeah,
more
Dilip
thing,
bhai.
yeah. So one more thing I would like to add to the risk side is concerns. When you are trading with the equity sides, there is usually the VIX is quoting somewhere around 15, kind of a 15-20 levels. While if you go by the USD INR, it is hardly moving with the 2% of the volatility is concerned. So 2-3% volatility is enough for the currency. So the risk remains on a relatively lower sides as against uh, the equities or other asset classes concerns. So as we have also discussed in the presentation, since last 11 months, the USDINR pair remains in the range of almost 1 rupee, 1.5, 1 rupees and 50 paisa. So relatively, if you go by the relative risk against the other asset class, the risk in the USDINR remains on a lower side. So that was the that was the beauty of the currency market or a forex trading is concerned. Hardly in a day you will see that the 15-20 paise kind of a move. So you can keep take a trade of calm and relax with the very small margin and with the better returns kind of a thing. So that was the beauty of the forex market is concerned. Low volatility, relatively higher returns. As you can see that the margin is hardly 2,500 rupees, but and there is a ROI will easily somewhere around 4% kind of a thing. So that is the how you can see, evaluate the risk reward is concerned.
Yeah, thank you, Dilip bhai. I think Mr. Patel, hope we have addressed your queries. Thank you so much. So I think we are running out of time now. Thank you so much for joining in today. We'll again connect with you in the month of October, and we'll see what happens in the month of September, and we'll see what lies ahead when we meet next time. Till then, all the best, and thank you so much for joining in today. Thank you, Dilip bhai, for a wonderful presentation. Thank you so much.
Uh, Thank you, Zamir bhai, and thank you all for participating.